Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is Ticker Request Live for Sunday, May 18th, starting it an hour later than what was previously normal. But I've kind of been taking a break since I've been focusing on either pre-market preps or overnight market preps. This week it's going to be pre-market preps. So if you don't get enough fun from tonight, make sure you tune in tomorrow morning. I believe that's at 8 a.m. Eastern, and I'll be doing that throughout this week, going over tickers like UVIX and the others that are on the list over here, although I should probably remove some of them. But yeah, it's been a while since I've done Ticker Request Live. I was just feeling it tonight because I don't have work first thing in the morning tomorrow. And so with that being said, I do have a beverage here with me, but I'll wait for somebody to actually, no, I'll just do it, because somebody's going to be watching this later maybe. And yeah, here's just a cheers to you guys. Cheers to it being Sunday. Hopefully you had a great weekend. It's been really nice weather here, but the next few days are not looking so great. But, I'll live. But anyways, cheers to you guys and, the upcoming week. I do think it's going to be an exciting one. And also, another fun, exciting thing that we can do tonight, if you do have a request, make sure you drop a fruit emoji with your request, because I was going to eat some of these before starting to stream, but I got some Mike and Ike's. Drop your favorite flavor, and I'll enjoy a Mike and Ike. This is the 10 flavors mega mix. So pretty much any fruit that you like, drop it with your request. I've got a small little dish here of some Mike and Ike's. I'll enjoy some of those. And so the more requests, the more candy I eat. So that is good for me. And hey, Saul, what's up? Thank you. BBAI, yeah, we'll definitely take a look at that, which I do happen to have here on the pre-market prep. But actually, before I dive into that, I did just want to mention one thing really quick just about UVIX, which I will be going over during pre-market prep tomorrow. But I did just want to note that, with the news from Woody's or whatever, downgrading the market or whatever it is from, I think, AAA down to AA1. I'm not exactly sure. But with that, there is a spike in volatility. And so the UVIX closed on Friday, and this is the one that I personally like to trade. The UVIX closed on Friday at 27.64, down 0.9% on the day. But when that news came out in the after hours, let's see, I'll just pull this up on the 10-minute time frame, which does include the overnight trading now. I've added that to the charts. But this did spike up, going up to a high of 31.86. I do have, I believe, just 8 shares of UVIX. So not a huge position, but in prior times when the UVIX or the VIX has spiked, I only had like 1 or 2 shares. So I do have a somewhat larger position, so I'm excited about that. But yeah, if you guys are curious, my average is 32.88, so still in the overnight, it's around 30, right at that green line there. So I am still in the red, but hoping I can take profits at around 20%. And with 8 shares, I haven't adjusted this, but maybe I will now. Kind of a thing that I think is nice. If one is to take 20% profit, which I like to do, I do have a limit order at 20%. If you have, let's say, 6 shares and you sell 5 of them at 20% profit, that means the profit is equivalent to 1 share. So you basically get a free share. And so rather than having a limit sell for all 8 of my, shares, massive position, you'll hear a beep, I believe, here in a second. Wait a second. Did I modify that? I don't know if I modified that. But then, you can just hold on to that remaining share as, whether it's a moon bag or just leave it as a runner. And so I'm adjusting my sell. I think you should hear a beep because the volume's on. I don't know if you heard that. Saw this little thing pop up by Ed here. I adjusted my sell order to only be for 7 of those shares, so then I get a more than free one in case it does run higher. But I also might adjust that to 10%. depending on what's going on. Because what I have heard is the last time that Moody's made this kind of change was basically the beginning of a recession. But a lot of things have changed, and we just have to be factoring in, AI, the tech revolution that's going on right now. A lot of that stuff hasn't been factored in. It's just like, you can't factor in the unknowns. And so I think it might be a nothing burger, and I think things could go higher. So that is why I might want to trim out of my position a little bit sooner. But anyways, enough rambling about that. I will switch over to TRL, which does not have any requests on there. Saul, but you got to drop a fruit. Got to drop 2 fruits if you want, Applied Digital and BBAI. I'll throw them both up here. And but drop your favorite kind of Mike and Ike fruit, and I'll have one of those. And let's see, Applied Digital. So I got those up there. And so if you're not going to say what fruit, I might go with the blue one. That is Caribbean Punch. Just having some fun with that. And so that will be the BBAI. Maybe it's a bad idea to do chewy candy on a stream because it's hard to eat them. But yeah, so I mean, this is legacy doodle of inverse head and shoulders pattern. A lot of people were posting this on X, so I feel a little bit confident in that. Let's see, there is this retracement here. This is old news. We did find a bottom here, which also corresponded with this 786 around 313, hitting the lows here on the 7th of May. Lows were just below $3, so like $2.96. But I'm just going to delete this retracement so we don't have it cluttered up here. Oops. And we got this other retracement here. And so for me, what I've been doing, I had sold my calls, which was just one contract, and I can pull that up if you're curious. I do believe I plan to buy back a contract if it dips low enough, but if it doesn't, I'm not going to be aggressive with it. But as far as my shares go, I did sell all of my shares, but I did buy back a couple right around, I believe this level. My average is, I think, 367, if you're curious about what I'm doing. I just have 2 shares, though, so really nothing too crazy. I really kind of just wanted to have the shares so I'd be following the stock more closely, and then I could maybe get more aggressive with the call. But yeah, I mean, everybody was talking about this inverse head and shoulders pattern, which looks like, maybe what I'll do, I'll draw a trend line going across there. It does look like, though, it got rejected from that inverse head and shoulders pattern. And, a saying that I think is really important is that the most bearish thing is a failed bullish move, or however that saying goes. And so this could be a failed bullish move, but generally, I mean, this reminds me, I believe the Coinbase chart was showing something like this, which I'm not and was not in that at all. I wish I was, but also Marathon Digital, very similar pattern here. I think that, a lot of people are just expecting the stock market. It's just rallied a bunch. We've reclaimed all of the losses from 2025 thus far. And so a lot of people are expecting it to roll over. That was a bear market rally, and then things will pull back. And I think things are actually just going to keep moving. I think AI is largely linked to crypto, and I think that, and really just tech in general at this point. And I think that Bitcoin is going to continue rallying this year because of everything that's going on as far as adoption, but also because of the 4-year cycle. And so with that, I think a stock like Big Bear AI will do well. But it's also very speculative. But anyways, so I mean, like I said, I have 2 shares at 367. I do plan on getting another share at 350. I have a limit buy there placed. And that would correspond with, I mean, this gap has already been filled. So I'm just going to actually delete that line. But we do have that, 618 there. And since we have already dipped to it, so like the low on the 15th was, 349. And so we've already already tested the 618. So I'm going to adjust this retracement to exclude the 50% and to include the 786, because that's really the next level down if we don't respect the 618. And so that is going to be around 326. That level to me seems, I would have to say, a little bit more compelling than where we've currently dipped to. And that's because of the consolidation over here. That's going to act as support. And if we do go a little bit lower than that, like perhaps going to 313, we could still be putting in higher lows if we test that level. But I think that would just be like a lot more support, given that we have tested it a lot over here. So getting below 313, I think would actually be very tough at this point, unless it is then kind of like a shift and that we're not putting in higher lows. So if we were to break this higher low pattern, that would be if we did go below 296. So let's see, what are the alerts that I have here? I do have one down here. What was I saying? 296. This one's at 222. I'm going to adjust it to 296. If we go below 296, then I think it looks like, it's not higher lows. It's breaking the trend. And so we can draw a trend line that would suggest, or illustrate where we'd like it to be holding above. And so that's, the lows here from, let's see, the low from April 21st and the low from May 7th. And so we're getting close to that, and actually, pulling back to the 786 would kind of invalidate that line. But if we get a wick down and a close above, then it wouldn't. But also, in order to make higher lows, it can invalidate that line. There's no real, requirement for it to hold that. That could just be a pattern that someone is keeping an eye on, and then it breaks, and then once it closes below, but above like 326, then somebody might be like, oh, it's broken my level, I'm going to get out. But really, then it starts to go up again. So I think that's an interesting level. Well, they are all in the past here on the 15th, but we do have kind of a confluence of levels with that 786 and that red downtrend along with the uptrend that I just drew. And since that is, an uptrend that I would like to see acting as support, although it doesn't have to, I'm going to color it green because that might be like a dip buying opportunity, like 350, for example. And then let's just draw it out over here. I'm actually going to remove the doodle, and then I'm just going to put what I view as like the neckline, which actually might be kind of an approximate neckline because, what we see is, there's this like left shoulder here. If I were to connect these 2 points to make that neckline, that suggests that this is not a valid inverse head and shoulders. But if I just kind of arbitrarily go like this, and let's see, I want to make it horizontal, to be honest. If I make this horizontal, or just from over here to this pivot point, yeah, we did it. That's very clearly just the level that I have over here. And so actually, I'm going to delete that. And let's see, that's a level I can delete. I'm just deleting that one there. That was at what price? 379. What I'm going to do is a trend line from this pivot high that was hit on March 25th, which was at 383. And I'm going to connect that to the high from over here. Oh my gosh, you're not going to believe it. It's the exact same price. So I'm not going to do a trend line. I'm just going to do a horizontal line. Horizontal ray, I should say. And so that's at 383. I'm going to make it thick, and I'm going to make it purple. So I know that that's a neckline. And so like it's kind of ugly over here. Maybe if I flip over to the weekly, Man, it's still kind of ugly. But you know, this is like that left shoulder. We can see it connected over here with this big red candle. Then on the daily, 383. I thought this was, the high was, oh, 379. So it's a little bit off. Dang it. Let's just, I guess I'll adjust this to 379. Dang it. Okay, so that's like the neckline. If we are to get back above that level, because as of right now, you know, with this green candle, the wick up, we got rejected from the neckline, but then we did gap up, which we have since filled, so that's kind of nice. But then we did get rejected from 420, filled that gap, and then have pulled back now below 379, which looks like it's the neckline. So that's not really that good. It does look like a rejection. So what we want to see is some closes above 379 and that to start taking off. But yeah, I mean, I think that this looks like a pretty nice pattern. And let's see, what's that 786 from, that yellow one? That's pretty notable. That's from the low of 116.5 hit on, this is insane, August 5th. How was it that low back then? It went up to 1036. That's crazy. I clearly was not following this stock then, but then it did go up to this high of 1036. That 786 is at 313. I do think that's a pretty important level. And so, yeah, any, you know, kind of pull back to that. We really just, though, need to see some closes above 379, which we did see one above. But let's see, the high on the 13th was 385. And this close was at 385, right at that level. More or less got rejected there after filling that gap. But with that, let's kind of consider the volume. I'm trying to get better at this, and I've also started reading a Wyckoff book. So hopefully that's helpful in videos and stuff. But it'll probably just make my analysis take a little bit longer, to be honest, because I'm trying to think about all this stuff. But so what we can see is we do have higher highs here in the stock price, higher highs in the RSI, so there's no bearish divergence there. Looking at this with this push up and this close up here, so that's a pretty high close. We did see an increase in volume. And then on the pullback, on the cool off, we have seen a decrease in volume. So that's good that it's starting to cool off, perhaps corresponding with that 618. And if I do look at this on the 10-minute time frame, maybe that's helpful. Thinking about that big spike up there. Yeah, so on that day, really on these 2 days, we were making highs. We can see that the RSI got up to, this is on the 10-minute time frame, up to like 86.5 over here, 82. So higher highs in the stock price on the 10-minute time frame, lower highs in the RSI. So that is bearish divergence. Following that, we have seen a pullback. And with this, you know, on this upside move, we did see volume being elevated, so that's good. On the pullback here, volume decreased, so that's good. On this big push up here, we saw volume increase, and as it's bled lower, volume has been relatively lower compared to that high. And so maybe that does suggest that we're finding a bottom before the next move up. So yeah, I mean, I think that BBAI is looking good, but I also think that, you know, I think it's risky when you take profits on something and then you buy back when it pulls back. I think that can be kind of bad because then you have like kind of an emotional attachment to it because it's like, well, I just made money on this. I like it. I'm attached to it. But then if it bleeds, then that's a bad sign. And so with BBAI, I might actually pull this up in TradingView just so there's a little bit less clutter. Oh, and Saul's doing strawberry, so let's see. So I'll have to see what strawberry. I got a strawberry banana, so I'll do that one. And I'll pull up the Applied Digital chart in a minute. But I've been really interested in like Wyckoff. And this is really coming from the Free Wyckoff's channel. I do post some videos to that from Rico. I think it's just really cool analysis. I'm not going to pull it up in TradingView. But what we can see kind of corresponding with this purple line That was a bad idea. Chewy candy doesn't work for streams. But so like with this purple line, we can see that, I mean, here a little bit, but we've been rejected from that level approximately, multiple times. And then, on the bottom, like over here around 293, that's acted as support multiple times, consolidation here, but then we broke lower. And so I guess, really just corresponding with this alert here that I have at 296, if we start to go lower than that, that might make me think that this was a failed breakout. And on the note of like the Wyckoff stuff, which I'm really not, no authority on, but this area here would be like the supply zone. And by supply, I mean that people are selling. They're selling shares, so there's a supply of shares there. Whereas down here, like below or right around 290, that's a demand zone. That's where buyers pick up. So like from here, it went up 23%. From here again, the next time that it revisited those levels, it went up about 30%. Down here, while it was painful and this seemed like it was breaking down, there was, 60% upside potential there, really just trading in that range. So right now it does look like we got rejected from the upper side of that range, but we could be reclaiming it as volume does seem to be cooling off, but we haven't claimed it. We haven't broken out yet. So we could be seeing a rejection, like I said, pulling down to like 326. So yeah, I think this is a good one. I like it. And I have a small position, but I'm not trying to spread myself too thin. The one that I'm really excited about is Webull. I kind of laid out my whole thesis on that during the overnight market prep, I guess, on Thursday evening, which I don't know. I'm not doing anything with it right now, just kind of seeing what happens, but maybe I'll pull that up during the week. But yeah, so Applied Digital, maybe is this when I just drew like kind of a rectangle here. So this is looking good because it's, up 22% on the day. Oh, and by the way, Saul, I apologize if and this I think is really just another, aspect of the channel. I'm just a guy looking at charts. I've got no authority. I'm learning as I go. And I'm going to be wrong probably 90% of the time, whether that's related to time or related to levels. But yeah, in the last time I went over this, I was suggesting it looked like it was getting rejected there. It might be pulling back to around 479 or 480. And that clearly has not happened. Did get a close at 683 above 648, that red line there. That seems like it's kind of an arbitrary level, to be honest, but arbitrary in the sense that I think I drew that based on the consolidation lows. So not the wick low over here, but where it was consolidating. So maybe it's not really that arbitrary. It just kind of looks like it. But no, that's based on there being a lot of trading around there, not only with wicks going below it, but there being consolidation above it. So that makes me think it could be acting as some notable resistance. But like the last time we contended with that level was when we hit a high on April 2nd, which was at 647. So we're actually a penny shy of that level. Came down, broke down to, the lows over here around 331. And now we're kind of, testing 648. With that being a weekly close above that level, I think that's looking good. But in the after hours, and overnight, it is pulling back overnight down to 644. So maybe I'll just look at that over here. I mean, it just looks like it kind of faded a little bit into after hours, and that continued into the overnight trading. Big red candle here, but did kind of, bounce after that move. So it's just like this downtrend here. So I don't think that looks too terrible or anything. But 644 is below 648, so maybe that's something to be keeping in mind. It'd be nice to see another close above 648, and if that happens to be a significant level, I just put it up there, but it may not, in fact, be a significant level. But if it is, what we want to see is a close then above the high from Friday, which was 699, because then that would be suggesting that this wasn't just a fake out break above that level that could then get rejected on Monday. But if there's another close above the red line, specifically above the high from Friday at 699, then that would effectively be a confirmation of this breakout, which would then suggest that if price does pull back, it would be more likely, statistically, I believe, to hold that level and then bounce, rather than if it doesn't get a close above 699, it could just as easily get wiped out below as hold that level. It's like 50-50 at this point. So a close above, at or above 7 would be ideal. But yeah, I mean, there's volume behind this. Let's see if it can hold up and at least get another close above 648. But even if it closes below that, it could just be like digesting the move before going to the next leg up. So yeah. And maybe since I did doodle, or not doodle, I'm just going to say everything's a doodle. But since this trend channel is really just based on like standard deviation, so it's not something that I specifically drew, that midpoint, because it's like, well, it's arbitrary because of where I draw the trend channel. I could have extended this further back in time. But since I did it from here, this is how that trend channel looks. That midpoint is around 710. But so maybe if I pull it up in, let's see, trading view, maybe there's something interesting we can look at. And actually there's maybe before, I've got it over here. So maybe I'll just share this. So from the crypto corner, I imagine most of you guys are not that interested in crypto. It's kind of my focus right now. But on Saturday, I had drew these two trend lines, this green one and this red one. And I was saying, like maybe I'd be interested to add to my Ondo position if it tested this uptrend, really getting to like 90 cents or below. And it kissed that uptrend like perfectly. So I just think that's really neat. I did not add to my position. I'm trying to be disciplined because like in the past when it's tested that uptrend, it's had wicks below and it's kind of hung out around it. So, maybe this is just a kiss and it bounces up going up to the top of that uptrend, the red uptrend, but maybe, we hang out a little bit lower before it goes up. So I just think it's a cool chart. I was interested to draw those trend lines, but yeah, I'll pull up Applied Digital. I don't think I've drawn anything on that in TradingView. And yeah, what did I want to actually draw with this? Just thinking, so this high, what's that high over there? Oh yeah, I guess I wanted to look at a kind of bigger perspective. So the high over here, 647, yep, so 648, yep. So that's the high over here, 647, yep. I was thinking, yeah, okay, well this is interesting. The top's over here, so that was resistance. So it's quite possible Applied Digital could be into some resistance. I'm sure you're not going to like this, but it's like, oops, dang it, I always do this. In Webull, I don't have to hold the button. Here I do. So it's like, maybe there's a left shoulder there, kind of a spiky head. And then maybe this is actually a rejection, corresponding with the top over here. So, oh man. So yeah, that could be something to potentially be cautious of. That I think that, where it's currently at 683, that seems like a very important level. Need to see that the strength behind that move continue. And we can actually compare it with how it was over here, like looking at the RSI. So this was slightly higher, but it's basically like the same level. RSI is a little bit lower. We'll see how that changes. We can also look at the volume to see how that compares. And so volume over here, not as high as over here. So I'm just trying to understand this. So we see high volume, then this goes higher. Here, high, so it's like highest volume on the lows. So this, I'm not exactly sure, but I feel like this could be, a head and shoulders pattern. So I'd keep a really close eye at right around 690, 683, whatever, where it's at now, up to 7. Want to see it hold, show some strength, because if it holds, then it's like putting in a bull flag, and then that could be like the, what it needs to get above that level. And I'm just thinking. So I've got that doodled up there. I'm just going to delete it so there's no clutter. And thinking maybe I'll do like a parallel channel, kind of, from the low here, like over there, kind of a fake out break below. Now, I don't know if this is that significant. I mean, there is a rejection from that level here, so it's like, I'll doodle this out as I talk about it. So it's like, in this range, goes up, gets rejected, pulls back, gets rejected from the midline, gets rejected from the midline again, goes to the bottom, forms a bull flag, goes to the top, breaks above, gets a fake out retest and bounces, then, goes back below, just bouncing around, kind of playing with us, goes up here, bounces from that level, breaks down, gets rejected, goes up higher again, pulls back down, gets rejected again, pulls back to the bottom. And now, is it going to get rejected from that midline, or is it going to go back to the top here, which would be around like 830? So I think that's cool to look at, to think about. And I wonder actually if I could even extend this further over here. I don't think so. Yeah, no. But maybe to over here. Hey, that's kind of cool. It's like oh crap, no, this is to pivot it. Okay, crap. So let's get this point and then go. Yeah, I don't know. And then it's all approximate. It's all, I don't know if that's helpful. Glad it's helpful. But yeah, I'll probably just continue to fumble around with this. But yeah, I think that like it's kind of at like a critical place where it needs to not necessarily continue higher. What I think would be really good is if it consolidated around where it's at. Because even if it's below 650 or so, if it's holding these levels, consolidating around here, then it could be like, bull flag. So, but with that being said, maybe it does dip down to this area. So neat. Yeah, very interesting to see. I'm gonna have another drink. If there are more requests, make sure you include your favorite fruit, because I have got some of these bad boys. And also, I don't know if you guys can see this. Something that Greg on X might be unhappy about. They got the Twitter logo there. That's crazy. I can't believe I bought this stuff with that logo on it. I should have protested. But yeah, I'll have another strawberry because you did include 2 strawberries and I had a Caribbean punch initially. Unless it was blue raspberry, I'm not sure. Because there are a couple of blue ones. But if there are no more requests, I might just pull up some of the stocks that I hold. Curious about AMC. Did a video on it Friday. Yeah, I mean, I think that we could see a couple more weeks maybe, but maybe this is a breakout. GameStop, I was curious about this to see, pulling back overnight around 28. Luminar has been pretty crazy. I've kind of still holding my shares, but I sell covered calls on a weekly basis, or really I just roll them on a weekly basis. 772. I think my strike for the covered calls $5 or 450. So I'm, kind of in dangerous territory. I believe there are 2 orange ones. So I don't know if this is Peach Berry or Mango Delight. We'll have to see. But yeah, Austin Russell, the CEO, stepping down. There's a new CEO. So that's kind of what's going on. Luminar sell as CEO out. Dilution soars. Yeah, I don't know. It's back and forth here. So, I mean, that big green candle on Friday, 19% up. Doesn't look so bad. But, yeah. And NEO, gosh, I hate the stock. I think that this is looking like it's putting in maybe bullish consolidation. Looks like a bull flag there, a bullish pennant. And maybe I got all this crap here. I can easily do a retracement there. That retracement's not useful. That yellow line, that's a trend line, so it's got some. I'm just gonna make it thinner. I've been making lines thicker lately, but I feel like they just get overwhelming. That gap's been filled. Same with this gap. So yeah, I mean, I just kind of view this as maybe bullish consolidation, a pennant. So like, there's, maybe I could do it. I don't have to do it from the wick highs. I could do it just from, and to be honest, I don't know what the rules are on that stuff because I feel like no matter what, it's always just, people are trying to approximate stuff. But yeah, so there's a little, maybe bullish pennant, bull flag, something like that. And if that is to be a bull flag, could just do a Fibonacci extension here from that low to the high, and then the low that we've seen here. And that would be suggesting a price of around 524. I had some $10 strike calls that expired on Friday. They expired worthless, which is not that big of a deal. I opened those knowing that I could lose money, but I did get too greedy with them, I think. And I now have, or had previously, I didn't roll my calls or anything. I just let them expire worthless, although I did try to get out of them for, 1 penny per share, per dollar per contract. Exit didn't work out. I do have $8 calls that expire next month, so I'm hoping I can get out of those, that we do see, a breakout. And then to fill these gaps, if it goes to 524, that would be great to see it break above here, get up to maybe 6, maybe 8, get out of my calls without losing money. That would be awesome. But yeah, NEO closed at 410, overnight down to 401. Not the best. Oklo, this is one, I have 1 share of it. I trimmed on the way up. I like nuclear, and Oklo's, intriguing to me. But I just have I believe a stop loss. I think my average is 27 something. I think I got a stop loss at 28. And then I have a buy at 27. And so I'm going to try to do that with my positions more often. And so I think that this one's nice in that sense. I don't have any calls, nothing else with this. With SoundHound, this is one that I believe I have 1 share left of it. I had trimmed when it was up here, which was probably just like 5 shares, so not a big trade or anything. But with this being above 11 in the overnight, it's down to 1077. I have a stop loss at 10. I'm very interested in this level at 1025 because that corresponds with the highs from, I believe, April something, April 23rd. Pi Day, dang it. Pi Day of 2024. And that being like this big cup and handle. And so, we got this massive breakout above, fake out, break below maybe, and then if we retest that. So I have a stop loss at 10 because I think my average is 9 something. I'm not really sure. But then, I'd reevaluate. Maybe I'd want to re-enter or whatnot. But I don't, that's really just like, I made some money with Sound. I'd like to ride it up, to maybe 24, 25, maybe higher. So that's why I have a stop loss. But I also don't want to, like, let's say it, drops to like 8. And it's just like, oh, well, now I'm like kind of negative. I'll just average down while it's here. I don't want to do that. I want to be in and out of trades more so than I have been in the past. So that's why I have a stop loss. And the one that I'm really excited about, I actually like kind of posted an extensive thesis about this on, let's see, on X. So maybe I'll just pull that up. Oh, Sound. Okay, Saul. Saul wanted Sound, and there's a grape. So maybe I'll before I get over to Bull, I'll go into Sound some more. Let's see. Grape soda. I've got that. And I happen to have one grape soda left. So I'll have that unless there are other grape ones. But nope. I don't see any. This doesn't go that well together, but I think it'll help dissolve the stickiness. Yeah, it's tasty. All right, so Soundhound. Yeah, I mean, I guess I kind of went over my thesis with this. I think that 1025 is a really important level because there was just this massive rejection from it. So here from 162 up to 1025, what percentage upside is that? 532%. Rejection from there, I think that makes that a very significant level. In the past, just arbitrary over here, so nothing there. But yeah, just that rejection, then it pulled back 65% or so. It started to form this yellow uptrend, which we recently tested. And from that, I don't know if this is anything of significance. I don't think I have any levels from this. Oh. What levels do I have marked on that thing? The 100%. The 100%. Oh, that's this. Okay, yeah. So that's like 964. That did act as resistance. Then we pulled back some. So I think that was a useful level, but I don't need to have the clutter up there. We got this other Fibonacci extension. The 100% was around 1139. And we did pierce that. And so, yeah, I trimmed I'm not sure if I trimmed the majority of my shares at 11 or like right around 11 or if it was at 1025. I'm not sure. I'm just trying to get better at managing risk and not to because like the Wyckoff ranges and stuff, it's just like stocks will trade in a range for a while. And so I think it's like really good to take profits, even if you love the stock, when it gets up to a level like this, because then it's probably going to pull back to, 1025. And then that would be more like the level to buy at. And we can also see here that we have been putting in higher lows. So I think that's good. This is, an uptrend. We do see that with the uptrend, though. We have been putting in higher lows with the RSI. Up to here, we do have the highest volume. Getting to this higher high, though, we didn't have higher volume than when we had this big green candle on the 12th when it went up over 22%. On the 14th, it went up about 4% because it got rejected from up here. So why might it have gotten rejected from up there? And so we can see, there's this gap that needs to get filled. And what I find, like, gaps are really interesting because they either act as resistance. I guess there are like three scenarios with gaps. They're insignificant, you go past them, either to the upside or downside, or they act as resistance, you go up to them and then they get a rejection, or you get very close to them, but not quite. And so right now we're at that kind of like not quite range, not quite level. And if we do, let's see, I'm just going to see what it looks like. It's probably not going to be that useful. I'm just going to do it from, let's see, where do I want to do this from? From the low over here. Let's see, I can drag this over here more, but then it's like not really, I don't know, is that seem significant or anything? Yeah, because then it's just like flat. Over here, I'm not sure. So I'm just going to delete that. But we do have, higher lows, although not here, but with this candle, but higher highs being formed with that rejection, just like how we had this, Fibonacci extension going from the low to the high and then the pullback. We could do something like that over here. So if, this is the low, and we go up to this high, and let's say we pull back to 1025, that could be an indication of where this is going. And this also does have the 10%, which I would want to adjust this to up here. 50% from that is 1068, but I'm thinking 1025. So let's see the 618. That's around 1022, so that matches pretty nicely. I might color that one light blue. And then this one here, we've already, moved up to there, gotten rejected. So that's kind of served as a level. 1139 would have been a level to take profits at, even though we're consolidating around there. So maybe not. So, there's this retracement, 1022 roughly corresponding with 1025. And then from that hypothetical, Fibonacci extension, if we do pull down to 1025, and we can actually just check on those levels to see what they are. So 871, I'll have to check that. 1265 was the high, and then 1028, I'm going to make that 1025. And so just making sure this is 871, so that does look right, as you can see. And so from that, we got the 100% extension, which is around 1420. And then the 1618 is around 1662. That's the 1618. And then there's this gap fill at 1525. So yeah, I would like to see this pull back, and also around 1025. All this consolidation here, which was below that level. So any buyers here might be buyers over here if it dips to that level. So that could be some support. So yeah, that's kind of my thoughts with SoundHound. But if it does go to 10, just for myself, I only have one share that I'm just going to kind of ride and forget about it. But if it does come down to 10, that would be my stop loss. And then I just reevaluate, because maybe, if it came down to this uptrend, let's say by the beginning of June, really just being arbitrary where the cursor is there. And so if we do a measurement from where price is currently at, 1080, so it's a little bit lower. What was the low on Friday? 1084, so I'm just going to take this from the low there to, basically the end of May. That's a 27% move to the downside if it does pull back to that yellow uptrend to find it as support. So, there is some downside potential, but I'm very curious to see how 1025 holds. So yeah, that's another cool one. Yeah, and also 1025 too. I'm just gonna do a trend line, so it's kind of like casual. But yeah, 1025, that would still be, respecting based on the closes. So this is the open here, this is the close here. So there are some wicks below it, but that did act as support over here, being approximate. And then so over here, this would extend to the end of May. So it's possible it could just be consolidating, being very boring. for another couple weeks. But then if that's the case and it's above around 1020, 1025, then I think that we would be looking for something like that. Crappy arrow up to these levels potentially. Like so 14, which from 1025, that would be about a 37% move to the upside. Gap fill will be about 47%, and the 1618 would be around a 60% move. So lots of upside potential, but to that 1025, that's a 5%, 6% move to the downside. And then, like I said, over here, it's around 30%, somewhere around there to, the yellow uptrend. So there's some risk there. And I'll probably just go over the bull chart because that's when I'd like to request. If there are some other requests, make sure you drop a fruit emoji with your request. So I'll eat a Mike and Ike. I got the Mike and Ike Mega Mix here. So lots of options. But yeah, the bull chart, I might pull it up on X because I think it's like it's good to be following people. It's good to be getting tips or ideas from people who are real. And I mean, I feel like I try to be really honest and stuff. But I mean, there are some people who are just like pumping things. I mean, like the channel, I've tried to change it a lot because I feel like I think this is funny. This is my response to Ricky Gervais. Spot the cat. It took me a while to find it, but then I found out I made it easy for people. Grok made that image. I've been having fun with the drool. You don't want to know the prompt I used for the drool. Because I think it's appropriate these days, but wasn't used to. So yeah, Mr. Chart Norris, he posted, don't buy a stock just for the sake of buying it. Don't buy just because someone posted a chart. Don't blindly follow anyone. Instead, use someone's chart as an additional perspective. Compare it with your own to see if it makes sense before entering a trade. Ask yourself, why am I taking this trade? What am I risking? And what is the potential reward? Always start with the bigger picture, then move to the smaller time frames to find areas where you can slowly scale in on weaker days. Most importantly, enjoy the process and stick to your plan. But remember, conviction, confidence, and confirmation should come from your chart, not somebody else's. And so I'm going to repost that because I think it's a good thing. And so I just said, thanks for posting this. And I felt like sometimes I'll post things and it's like, is he talking to me personally? Gold, Chart Leroux. I'll pull it up in a second. But you got to include a fruit emoji. I'll eat a Mike and Ike. And so going on with this, just responding to Mr. Chart Norris, because I felt like he was kind of talking to me, although he definitely wasn't. But I think he was getting a lot of stuff from Bull because it was pulling back. And so I said, thanks for posting this. Bull had initially caught my eye because of the prior high of 1340 on March 28th, which is this yellow line in the chart here. That high there, I noticed that, and I was like, well, I mean, that seems like it could be finding support there and bounce. I'm kind of intrigued, but I didn't open a position there. But following recognizing that, I started to notice his posts about Bull, and maybe I got a little bit of FOMO. And it's like, well, I mean, my thesis is kind of that, this 1340 will act as support. It was bouncing. It had pulled back some. I'll enter, with a small position. But then over here, you can see this big red candle. It really started to sell off Friday. Or it was testing that level on Thursday, and then on Friday, it was really, breaking below. So I felt like, I really needed to dive deeper into my analysis. And so I said that, I noticed that yellow line. I then noticed your charts and gained confidence in my identification of that level, which has since failed to hold as support, as you can see from my chart. This is actually probably Thursday, so we can look at it on Friday where, so that was Thursday, yep. And so this evening, and I did this during a stream, I more critically looked at my chart, recognized that there were consolidation lows around 1110. So that's going to be this green line suggesting, like the yellow one probably would have been green before, suggesting a buy. But since we've broken below it, that's now a cautionary level that might be acting as resistance. The green level acting as support at 1110. Because there are these consolidation lows. So not like a wick low, but that, there's some beefy support there. Lots of days tested that level at 1110. And so that was making me think that's the next level to act as support if it goes lower. However, though, after today, my position size is sized appropriately for my comfort. Whatever that is for you, everybody's different. But you got to make sure that you're trading amount of money that you're comfortable with, so you're not getting emotional. And I was realizing I was not trading with a plan. And so that's kind of why I have this shading here, because I mapped out like a risk to reward type of plan. And so my current position is at my comfort level. But if it does dip to around 11, like testing that green line, I won't be able to comfortably add. So I'm experimenting with a stop loss to sell a portion of my position above that level so I can buy back my shares at the discount. And so I believe I have a stop loss at 11.98, somewhere around there. We can look at that on the chart. And then so if that stop loss is hit, I exit out, and I already have a buy order placed at 11.10. So I'd buy back those shares at 11.10. And so if the stop loss is hit, but the discount level is not, I guess kind of best worst case scenario, I guess, that if I am stopped out, but then it doesn't go to 11.10, I'll be able to make back what I lost on a fairly conservative rally. So, I feel like that's a pretty good way to play this. If it dips and I get stopped out, I'll buy back lower. But if I am not able to buy back lower and it rallies, I'm able to make back what I got stopped out on by that swing and perhaps beyond. And so I feel good about my analysis. And it was his birthday a few days ago. So I said, thank you for your charts and your posts. And I hope you had a great birthday. And so this is, the chart that I have there. You can't really see it all behind me. So I'll just pull it up on the chart over here. And so it's possible I adjusted this since he posted it, but this is kind of my map out, is that, let's see, I'm not exactly sure how to read this, but with my stop loss, I'd lose about $20, which is no big deal based on what I would gain. And so doing this, long position, I have 40 shares, full disclosure, it's about $500. That's what I'm comfortable with. Not that I wouldn't be comfortable having a larger position, but to maneuver, $500 I think is good for me to be able to maneuver. And so my risk is 50%. So my understanding of that is that if it does go to the stop loss level, which is at 11.98, then I'd sell half of my shares. So, and then I'd be risking the remainder of that, the other 50%. And so my entry price, it looks like my average is at 12.89, which is going to be that white line there. And my profit price is at 18, which is somewhat arbitrary. You can also see the numbers over here, like 12.89, 11. The low over here, 11.98. But yeah, $18. That's kind of just corresponding with the consolidation highs here also being, like a whole dollar number, an even number. But really, my level, so I've got 40 shares, and my plan with this is that if it, dips to 11.98, I sell 20 shares at a loss, lose about $20. No big deal. And then I buy back those shares at 11.10. That's great. I'm back to having 40 shares. And then currently my 20% profit level is, I believe, 15.24. So I've got a stop loss there, being that it's just below this gap fill, this gap that needs to be filled. And the thought process is maybe the gap acts as resistance, or maybe the gap acts as a lure to bait bulls to thinking that it will go up that high, but it doesn't. It gets rejected before getting to that level. So that's why I'd have take profit level for 20 shares at 15.24. But if this plays out where I sell 20 at 11.98 and then I buy back those 20 at 11.10, then I'm still going to leave my take profit for 20 shares at 15.24, but then the other 20, because I have no stops or anything, in there at this point, because I'd have bought them back, then I just potentially let it run, maybe to 16.41 or maybe up to 18. So I'd kind of evaluate that, see how it goes, but I've mapped out that trade. I feel really good about that, and I did that live, I believe Thursday night during overnight market prep. I appreciate those of you who tuned in for that, whether live or after the fact. That was a really nice process for me to try to just think more critically about this and just really map it out. But Charles Leroux, sorry if I'm mispronouncing your name. I do see the watermelon, and let's see. On here, there is a watermelon, which is green. So I'll do that one. I don't know if you can see the green one. And you are requesting gold. I'm going to pull that up in TradingView just because it's a commodity. I think it's a little bit better to look at over here. This is not the one I was looking at. I think Capcom. Yeah, so I drew some levels over here. And so this is if you want analysis on gold, Gareth Soloway, I can pull up his channel real quick. Gareth Soloway does a game plan every morning. And let's see, he doesn't usually post them right away. This is a bunch of crap that I've been watching. Excuse me if you don't like the crap that I subscribe to. Don't judge. But Gareth Soloway, let's see. Yeah, so this is his channel, Gareth Soloway, or it's Verified Investing. But that has a bunch of other people making videos, whereas his channel is a little bit more limited. I prefer it. He does a game plan, so like this kind of video where you can see the thumbnail there, and he covers gold pretty much every morning before the market opens, and I think his analysis is really good. I think though that he's a little bit more he's in and out. He's very much a swing trader, and so I think that he tends to be in that sense more take profit sooner rather than later, which is a really good practice. But I think that he does miss a lot of, he takes the risk off the table sooner than most people, which is good, but I feel like there's always missed opportunities, or he's really disciplined about entrances. And so I think that can be, there are missed opportunities there as well, but it's all about risk management. He gets exposed to less risky things because of it. But anyways, from his analysis, I just doodled this up here. I threw it up here kind of last minute, I believe during a stream. But so there's this uptrend acting as support, and then this horizontal line here corresponding with the pivot highs over here acted as support on, let's see, May 15th, wicked below that level. But what's now going on, I suspect, or potentially, is a bear flag, and that this could be going lower. But I'm not exactly sure. And I had actually, when I did the GLL video, which is I believe 1x leveraged short, so it's not leveraged, gold ETF, I had kind of talked about gold coming back to this level based on that ETF. And so what I can do, I'm just going to pull up the gold and silver list here, GLL, ultra short. So this has got to be 2x leveraged, 2x inverse, yeah, right over there. And so I had talked about this. So these are the pivot lows from April 2nd. So April 2nd was that low over there, 1250. I've got marked with that white line. And so over here, this would be the pivot high, April 3rd, so it's the day after. But that's the consolidation highs, that yellow line going across there. And so we've retraced to that level. We've retraced to the highs from over here. But with GLL, we have not retraced or not retested the lows over here, but then acting as resistance. So I think this is just a nice example of when trading ETFs, it's good to be more conservative with moves. I took profits, which were small profits, on a GLL swing, I believe at 1101, because I knew that this, as an ETF, gold might come back to that level, but the ETF might not. And so that's what we've seen. Looking at gold over here, this does seem like a bounce, but this is like consolidating below, let's see, 3,250. I'm not used to looking at gold prices. It's a big number. But downside move and consolidation makes me think this could be a bear flag, and that could result in perhaps another test of the horizontal line, which would also correspond with that uptrend. Or actually, I was thinking about natural gas, not gold, for a second, thinking that there's another level to the downside. But I mean, if it does break this uptrend or that horizontal line, that's around 3,140. If it breaks below that, the next level that might be acting as support are the highs over here. That's around 3,040, somewhere around there. 3,000 being, a whole thousand, like divisible by 1,000, so maybe that. And then down here, I think that there would be a ton of support at 2,900. But yeah, I mean, let's see. What happened at the top over here was, you see lower highs also corresponding with lower highs in the RSI. So there's no bearish divergence or anything up there. That would be hidden bearish divergence, because usually bearish divergence corresponds with higher highs in the stock price, but lower highs in the RSI or the oscillator, whatever you're looking at. But the thing that stood out to me about this being kind of bearish is the volume. And so what you can see is that we're attempting to get back to those, I believe, all-time highs, but volume is lower than it was over here. So that was kind of a tell that there might be a pullback. And so that's what we've seen. And so for me at this point, I do not have a gold position. And from my experience recently trading GLL, I don't know that gold's really that interesting to me, because even with 2x leverage, so from the top here to the bottom, that's not even 10%. And that's like a pretty big pullback. 2x leverage, that's, close to 20%. But looking at GLL, so this is from the highs from May 7th, so that'd be right around here. That represented a move of, almost 16%, but that's from the absolute low there to the highs. So you'd really have to time that pretty nicely. And so at least knowing me and knowing my execution, I would not have the absolute lows. So I would at best be able to get a 10% swing out of this. And I was feeling a little bit uneasy over here on the 9th. I think, this was last week, so this was over the weekend. I sold here because I was concerned that it might not be going up. But we did fill the gap. I should have held. I could have made, I think, $10. I think I had 10 shares. But I didn't want to hold over the weekend. And for me, it's been good to be practicing in and outs. Do I want to hold this over the weekend? I don't know. I don't need to. So yeah, and that's also kind of something I've also gotten accustomed to with natural gas. Whenever I open a position, whether long or short natural gas, it always tends to go further than what I expect, whether that's regarding the entry or the exit, or it doesn't go as far as I expect for my exit. And, I just end up spending a lot longer in a position with natural gas. And so I was looking for it to get up to, just to mention natural gas real quick, I was looking forward to it getting up to around 415 to open up a short there to pick up some KOLD, but that did not happen. I believe there is a trend line here. Gareth Soloway's gone over it. But I think from the lows here to, yeah, so I mean, it's something like that, but that didn't get tested, over here. So I'll just have the pivot point be that high so I can move this other one. Yeah, what was the level? I don't know. Maybe from here. Yeah, I think something like that. Delete this crap because I was wrong. But yeah, I mean, because you see from this trend line, the lows here, so it moves up, pulls back. That's something to note. And then there's this like wick low over here. So if I adjust this to those lows, get that to intersect the low right here, then that's kind of like a predictor of the top here. But who knew? I didn't know. I thought it'd go higher. But for me, with natural gas, I'm looking forward to it to come down to at least 278 to go long, which I'd probably do with Boyle because DGen Ed, but very risky. But yeah, I mean, if it did come down to 278, it'd be opening a small position, and then I could go heavier down here around 250 if something like this did happen. But yeah, I did not go up here. Still looking for that, but I don't think that's going to happen. And we could also see Fibonacci retracements. Okay, yeah, I think that Gareth talked about this. So like from the high here to the lows down here, that did pull up to the 50% retracement. And one thing I might do with these Fibonacci's, if you guys don't mind, I might, adjust the settings of this to be okay, so those and trend line. I don't need the trend line. Background. So that's those different, it's all white. But maybe what I want to do is do them as different colors. So like the 50%, I don't know, that's green, I guess, getting into the, hey, that's something. And then this is yellow. That's the shading there too. Or no, actually, maybe I want to do this one as yellow. This one is orange. And the 786 as red. Well, no. It's like caution, caution. No, this should actually be the opposite. Well, it depends on your perspective. I think I like green better than red, so I might do this going from the gradient of orange to yellow to green. Yeah, because then this is like, it's like kind of a cautionary level. This is getting a little more comfortable, and then that is like, yeah, but maybe sorry, this is like maybe where a little bit of OCD comes in. So I might do it actually yellow. I just feel like orange is an odd color. Then I'll do green. And then this one I'll do blue. I don't know. No, I think I liked it better before. But yeah, I will make that let's see, not orange. I will make it, yeah, because that's odd. It should go from yellow, orange, red. I'm reversed there. But that's just kind of bland. It's not too exciting. So maybe I'll do yellow in the middle. And then this one that's yellow, I'll do that as green. That's like, go ahead, start building a position, start trimming, something like that. So I think that's a nice way to think of it. So yeah, So that's, at least wait for the 50% retracement. And so that was that getting rejected. But yeah, I mean, let me know if there are other requests. I did go over, let's see if there's anything else on here. Intel, this is just like floating up. Makes me a little nervous. Marathon Digital, this is one I think maybe inverse head and shoulders. This makes me feel bullish about Bitcoin. QS, this was looking really good, but then it's pulling back 6% overnight after the 11% move. So I don't know. I think my profit level's in the 5, or my break evens around 5 or something. Tesla, I'm waiting for this to get up to 360, and then I'll consider opening a short, whether that's TLS or TSLS or TSLQ, which I believe is 2x leverage short Tesla, whereas TSLS is not leveraged. But yeah, that's something I'm intrigued by. Unity Software, I like this one. But yeah, let's maybe pull up crypto stuff. Instead of curiosity, where's Bitcoin at? 104 to get a wick up to 107. And I'm actually curious to pull this up in TradingView. What was the close for the week? I think this is the highest close. The highest weekly close, I should say. So put this on the weekly. Got a weekly close at 106,473. That's the highest weekly close in the history of Bitcoin that we just experienced. Yeah, we'll have to see. I'm still stacking, so I'm fine if stuff pulls back. But yeah, let's pull up the TRL. Just got a couple there. Also went over gold. But yeah, I do still have this drink. So I'll make some progress on that. But let me know if there are some other requests. I might just clean up what I got on the pre-market prep list here. Big Bear AI, I think I'll delete that. Bitcoin is, one that I need to go over. Bull, I haven't done anything with it, so when I last covered the same. ChargePoint, this is one that I covered on Thursday. I have to say, I'm sorry if this is offensive. I no longer have a ChargePoint position. And the reason for that is because it looks like it's been trading in this range for a while. And so within this range, you've got the demand zone where people would be buying down here. And then up here, you've got the supply zone where clearly there's been selling because it hasn't been able to get above there. And it closed on Friday at a price of 71.45 cents. But what do we see here? The high over here was 72 cents, which looks very similar to the high over here. But the high was actually 71.97 cents. What do we notice about this? That the RSI had a higher high. So that is hidden, very subtle, hidden, weak, bearish divergence. We can also see, let's kind of compare the volume here closer up. We had higher volume when it was getting up here, when it was clearly getting rejected than what we saw over here. So lower volume. But yeah, I mean, if this would have closed above the high here, above 72, I think that'd be good. But also, not necessarily related to this. When it went up here and then it pulled back, it's like, dang it, I wish I would have sold at like in the 70s. That was always kind of my plan, to just exit. Not that I don't like ChargePoint, I just think it's a little too speculative. And so I decided to fully exit my position. The contract that I held, $2.50 strike that expired last Friday, went to zero, as you might expect. So I no longer have a charge point position. And the reason why I decided to get out on Friday, I did not want to be holding the shares over the weekend when there are these very subtle signs suggesting rejection in the supply zone before a weekend, and with there being the likelihood of the announcement of a reverse split. Their earnings is going to be on 6/4, June 4th. I happen to have a green line, a horizontal green line there, just expecting that around June there would have to be some sort of vote on a reverse split in order for them to stay compliant on the New York Stock Exchange. And that has not happened yet. And the deadline in order to regain compliance is going to be August 19th, this line here. And we can either regain compliance by having, I believe, 30 consecutive days closing above $1 a share and closing a month above $1 a share. And so towards the end of the month, it's possible there could be like a little move, to get this up to around 1. Getting people's hopes up, hey, we might get that monthly close above 1, but still wouldn't be meeting the criteria of like 30 days. I might be wrong about that, but I believe that's the requirements. And so if there is a move up to 1, I'd be missing out on that, and that would suck. But I think that would be to get last minute bag holders, to get some people to be buying up here before it really starts to bleed following a reverse split and stuff. So in my view, it's just a little too speculative with the reverse splits. And, I'm just trying to get better, because I'm going to be reading more about Wyckoff analysis. And yeah, selling up here to then buy back down here. Let's say, selling here at a loss, whatever, and then buy back down here, maybe wait so it's like about 30 days, buy back here so there's no wash sale or anything violation, and then going from the bottom here, then just a swing to the top. That's a 27% gain. And then, okay, if it comes back to the bottom, or at least if it breaks below this half point, I'll accumulate some more down here. And let's say we get the average at around 62 cents, 63 cents, somewhere around there, right around here. Move to the upside. That's another 13% move to the upside. So, yeah, I feel like this could be happening, either of these scenarios. And I feel like this one's a little bit more likely. But yeah, let's see. Well, I've been streaming for about almost an hour and a half, hour and 20 minutes. So what I might do is slam this and then, wind down. But because I'm going to be doing pre-market prep tomorrow at 8 in the morning. And I'll probably have some, requests, take some requests towards the end, but just going to go over these usual tickers. I'm just going to clean up these other ones, pre-market prep. Wow, I've cleaned up a lot of stuff on here. So yeah, and so with that, I'll be going over the UVIX, which is currently overnight trading above 30. Uranium, SPY, S&P 500, Bitcoin, and Ethereum, volatility. And so I think that's just a nice way to get the day going. And then maybe I'll, add some mystery ones. But yeah. Some surprise ones, I guess I should say. But yeah, if you guys haven't already, make sure that you like the stream, like the video. But as always, those are just my thoughts. And if you did find them helpful, make sure you like the video and subscribe to the channel for more this is Ticker Request Live, which I'm not going to be doing that often, but I'll try to kind of incorporate requests with whether it's pre-market prep, overnight market prep, or, I don't have to be at work tomorrow morning, so it's easier for me to do Ticker Request Live. It's just 9 p.m.'s rough because where I live, it's actually 8 p.m. and the sun's still out. And it's just nice to enjoy, before going to work on Monday. But yeah, I don't have to be at work until the afternoon tomorrow. So, but yeah, thank you all so much for hanging out. It's been fun, and I'll just slam this before I go. Can't be drinking alone, but it is apple juice though. No mistake. Um, I'm joking. It's not apple juice. But yeah, thank you guys so much for hanging out, and I'll if you want to join, see you in pre-market prep tomorrow or throughout the week during pre-market prep. Those will be, I'm going to try to do 8 a.m. every day this week, but it's possible it'll be 8:15. It's just tough to, wake up and get ready and be presentable that early in the morning. But yeah, I'll see you guys later. Take care. Have a great start to your week, and